morning. Today is Friday and it's February the 16th, and the time right now is 5 minutes, or rather 4 minutes to 9 in the morning. And overnight, we have the release of the US retail sales number. It wasn't pretty. The market was expecting a weak number to begin with, but it was even weaker than expected. Going into the release, the market was expecting a drop of 0.5%. The market came in at negative 0.8. So this was a lot weaker than the market expectation. In fact, it is the weakest since February of last year. And not only that, the December number has also been revised from 0.6% to 0.4%. So overall, it was a weak number, suggesting that US consumer is not spending as much. And this is in contrast to what we have been seeing last week in terms of the economic numbers, really suggesting US consumer are on the rampage. Now, the dollar actually reacted to the downside, obviously. We can see that the dollar pulled back from the overnight high of 150.88 in the dollar yen. So the dollar yen also has another factor. Earlier in the day, we have the release of Japan's Q4 GDP numbers, and it was negative numbers, which also confirmed that the Japanese economy has slipped into a recession. On the same day, the UK economy also slipped into a recession. Not only that, Japan also lost its ranking as the third largest economy in the world yesterday, and that has been overtaken by Germany. Now, Germany itself has not been doing too well last year and this year because of the war that's happening in Ukraine. So by and large, we can see three major economies have slipped into recession. And this is not working out very well for the global economy. But today we're going to talk a little bit about dollar yen. Dollar yen has slipped back to test the 149.50 levels last night, and this is on the back of fear that the Bank of Japan may actually come back to intervene, because you can see that this week dollar yen have popped back above the 150 mark, and this is refocusing traders' view that eventually the market will test the 152 levels. Now remember, the 152 levels are very sensitive levels. Back in 2022, the market came very close to 152 and was sold off massively because the Bank of Japan actually intervened by selling dollar for yen. And last year, we also saw dollar yen coming back to retest this level to as high as 151.91. And again, traders lost their nerve and started to take profit for fear of an intervention by the Bank of Japan. So when we see dollar yen pop back about the 150 marks, again, traders are now wondering, will the market now be able to clear the 152 levels? And this is again the million-dollar questions. Will or will not the Bank of Japan come in to intervene one more time? And again, of course, we have no confirmations, but I think we are beginning to see news that suggests that the Bank of Japan together with the US Treasury may be supportive of intervention. So do watch out as the dollar yen creep higher. As we can see right now, the market is popping back above 150.15 levels as we are speaking. And so upside is pretty limited, and be very, very careful chasing this market ever higher as it nears the 152 levels. This is all I have for you, and I will see you back on Monday morning. Bye-bye. Take care.